But this is a powerful uptrend. I think a lot of generalist investors are waking up and realizing there is no solution to these problems. In fact, there's only managed outcomes, and silver and gold are the prime beneficiary of this exact environment. And people are just starting to wake up to that.
This is Kaiser Johnson with Liberty and Finance. With silver's recent spike higher, if you're needing to raise cash, Miles Franklin stands ready to buy your silver at highly competitive buyback prices. Also, with a high spot price and still low premiums, it's a great time to swap from silver bullion into silver eagles and junk silver. And finally, we're also happy to swap your gold into silver while the gold-silver ratio is still high before the silver train leaves the station. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny, the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. How's it going? Good to see you again.
Great to have you back here, especially as we see silver apparently breaking out. It's at a 13-year high. A lot of people in the space have been talking about really these levels of 35, 36, and once silver breaks above here, we could be off to the races. I guess we'll see, but your take on what we're seeing right now in silver.
Yeah, very exciting. Really, what I like about our focus sectors at Silver Chartist is we focus on silver, uranium, gold, and platinum. And often they move at different times. So you can kind of use ratios to move, overvalued into undervalued assets. But what's exciting right now is all four of those focus sectors are really confirming new uptrends and breaking out and are in the early stages of what I view as a long-term uptrend. And silver specifically, I think, is particularly exciting for many reasons. But number one, it's the only commodity on the planet that's trading below where it was in 1980. And I think $50 has a magnet on it in the quarters ahead. Now, it doesn't mean we go straight there, but you're talking about key breakout levels. Well, back in April, just before the whole tariff tantrum, the intraday peak was $35.50, $35.50. And I've been telling our members that once we get above that level, that's the key that unlocks these higher price targets that many of us expect up towards, 40 and up into, towards 50. So we cleared that level yesterday. So very exciting. It looks like we're going to have a weekly close above 35.50. Now, it doesn't mean we're not due for a little bit of a pause here, a little bit of consolidation, but this is a powerful uptrend. I think a lot of generalist investors are waking up and realizing there is no solution to these problems. In fact, there's only managed outcomes, and silver and gold are the prime beneficiary of this exact environment. And people are just starting to wake up to that.
Now, if we look at the charts here for silver, obviously we are hitting a 13-year high here. What does the chart look like in your view, and what are some of the conclusions you're drawing from it?
Yeah, so if we can, Elijah, I'll just go big to small, because I think this big picture pattern here in silver that I'm going to pull up here in a moment is probably the most important chart pattern to be watching. It's kind of my roadmap towards $50 silver, and I'm pulling that up right now and just getting the settings correctly. But many people have seen this massive cup and handle pattern in silver. This goes back to 1980. So this is the previous peak in 1980. They're right around $50. Got up to 50 again in 2011. And then we had this nice rounded bottom. And then right now, we're rising within the confines of a bearish rising wedge, So people hear the term bearish and like, well, that doesn't sound good. Well, the apex of this pattern isn't up until the 60s. So it's possible that we run all the way up to 70. Now that's like the extreme high end of my intermediate term target. And then I think once this pattern, this pattern takes us up towards around $50 silver in the quarters ahead before a pretty big pullback. $30 is now major support. Not sure we'll backtest that, but that wouldn't be surprising after a run towards, say, 50. And I think that pullback, by the way, after we run towards 50, probably coincides with some kind of what I call a deflationary impulse. We live in a boom-bust cycle where everything kind of rallies, and then you get these scares, these panic-driven sell-offs. And I think on the next big one, silver probably gets hit. That's where you maybe backtest somewhere around $30 as major support. And then how does the Fed respond to that, as they always do, with quantitative easing, debt monetization, money printing on steroids? And that's where I think we finally see the ultimate targets, that many of us have been expecting north of triple-digit silver, $10,000 plus gold. I said a lot there. Hopefully I didn't get too far ahead of ourselves, but I think this pattern right here is the roadmap that takes us up towards around $50 as the intermediate term target, which I would view as a nice profit-taking opportunity in paper, in the any paper vehicles. I'm not selling my physical metal at 50, but that could be an opportunity to take some off the top, in mining stocks or paper ETFs, things like that.
Do you see that this $35, $36 level is significant in so much that I guess that we might see kind of a blow off top from here, or do you continue to see kind of maybe a stair step pattern from here?
Well, I deal in probabilities, not predictions, right? So I think the path of least resistance, the most likely outcome is a stair step. Parabolic runs do happen. Often people say nothing goes up in a straight line. I mean, that does happen every once in a while, but they're rare. So I would never count on such a thing. Although silver there is historical precedent for silver and especially silver miners to go on parabolic runs. I'm thinking of 2016, where in about 7 months, SILJ, the ETF, went up about almost 500% in 6 or 7 months. So that does happen, but I would never count on that or predict it. I think 2 steps forward, 1 step back, 2 steps forward, 1 step back. So we had just a nice run up, consolidate, look for a next push higher, consolidate. And I think that's kind of the stair step move we take up towards 50. And on the weekly chart here, it's interesting just how well silver respects these just kind of simple technical patterns. I had drawn this red trim profits line, and that's in paper accounts. So I'll get rid of that because there's context behind that. Every time we run up towards there, you might get a wick or two above it. But, I drew this line before, and that so far has halted this current, big move we've had up in the last week. I mean, we're up 10% this week alone. So this is kind of another roadmap technical pattern you can look at on the weekly chart, this well-defined channel.
One of the other metals that's making a really exciting move right now is platinum. I know we've been talking about platinum for quite a while. It seems to possibly, as you are showing on the screen right now, really be breaking out of another pattern there too.
Yeah, I've been talking about this one for a long time and saying, hey, this could take a while to resolve, but ultimately this triangle pattern, this chart is of platinum. And I was saying, look, if it goes right to the apex, which rarely happens, you can see that right here on the screen, that would be about November of 2025. So, a handful of months from now. However, it's more common to break out, towards the, as you approach the apex. Well, we got that breakout last month. You see that right here on this candle. So breakout above average volume. And now this month, we're up 11%. And we're only 6 days into the month, 5 trading days, and we're up 10%. So this is a very powerful breakout in platinum for sure. And I think platinum is one of those metals that has the potential. I mean, it's higher risk, higher potential reward, but it could be the leading performer in the precious metals complex. Could potentially outperform silver. It's a smaller market and just takes a small percentage of the public to say, hey, you know what? I want a little exposure to platinum, or high net worth individuals and institutions. Just if big money says, hey, I want a little bit of platinum, it's a tiny market with historical precedent for very rapid moves.
And I think just looking at the ratios here, I mean, if we compare it to its all-time high, right, it's half of its all-time high approximately right now. And platinum is also about a third of gold's price, which has really never happened ever in human history that I'm aware of. So it seems, you're pulling up the platinum gold ratio is just so undervalued, it seems like right now.
Yeah, 100%. This is a ratio chart of platinum to gold. And it goes back, this particular chart goes back to 1985. But you're right. As far as I know, this ratio that we're at right now, we're just coming off of not a generational low, not like a multi-decade low, but a forever low, like never before seen in all of human history low in this ratio, where there was a brief moment where you could swap 3.5 ounces of platinum for an ounce of gold. And a better way to say that is, you can swap gold for platinum. And I did that. I sent an alert to our members. I traded a handful of ounces of my gold, and every ounce of gold got me 3.5 ounces of platinum, which is crazy because historically platinum is more expensive than gold. So to be able to trade, 1 ounce of gold for 3+ ounces of platinum, I think is an opportunity that is very, has a favorable risk reward setup. Nothing's guaranteed, but I think mean reversion is very likely here. So, platinum, I think it's more risky, more upside potential, and it can warrant some exposure, in your physical holdings for sure.
As for gold, I mean, that's been the one making headlines, right? It making new all-time highs here. Your take on where gold is right now, and do you can see it to continue to run from here?
Yeah, so I'll make the first statement just so I don't get labeled like a bear or my targets are way too low. That I think we're headed to $15,000 gold this decade, and I can back that up with data and historical, historical comparisons. However, I think over the short to intermediate term, the risk reward ratio is not very favorable in gold. In other words, yeah, maybe there's another couple $100 of upside potential, but the downside risk is equal to or greater than the upside potential over the short to intermediate term. So what I've been doing is kind of swapping out of my physical gold positions exposure and some of the big gold miners that have had really nice runs, maintaining exposure to the precious metals complex, but substituting gold for more undervalued components such as silver, silver miners, and platinum. Bullish on gold, but it's already had its big run. Silver hasn't had its big run. It's just starting. Same thing with platinum. It's just starting. So, I'm not really looking to add gold right here. If I didn't have any, sure, I'd buy an ounce or two, but the risk reward is not as favorable as silver and platinum.
Now, what kind of pullback do you potentially see in gold?
So this may be frustratingly imprecise, but what I see is a wide range for the next several quarters between maybe 3,000 on the low end and 3,510 on the upside. So I think we kind of grind sideways. And if we can just hold up near, 32, 33, 3,400 for a couple of quarters, that provides the room for silver to have its big catch-up move. What we don't want to see is gold to have a big sharp pullback, 28, 2,900, because that's going to be really hard for silver to rally up towards 50 in that environment where gold is kind of pulling back sharply. So I think my baseline roadmap is for gold to just kind of consolidate sideways in a few $100 range, and that allows for silver and even platinum to have more of a catch-up move on that ratio basis. And that's historically how these bull markets move, is gold goes first, then the big gold miners, then silver, silver miners, and the more speculative components of the precious metals complex move last. So what we're seeing here, it's frustrating for people, overweight silver, but this is typically how it goes. So that's my forecast.
It does seem like gold and silver, the prices typically move pretty similar to each other, but recently in the last couple of months, I've noticed quite a disconnect with gold versus silver. You saw the gold-silver ratio reach above 100 to 1. Now it's around 92, so it's fallen dramatically over the last few days here. Your take on the action silver versus gold at the moment?
Yeah, so I got pretty aggressive I use ratios. I try and use ratios to my advantage. So, I've got two, not to overcomplicate things, but I've got two buckets of physical metal that I personally use. So I've got like my physical metal that I've used in a generational insurance policy for my children, their children's children against out of control central planners. And I'm not touching that at all. That's just planning to hold forever. And then I've got some that I keep in secure storage, and I'll use the ratios to my advantage. So back in early April, I did swap some gold for platinum, and I also swapped gold for silver. So, in that storage account with physical metals, I'm down to basically zero exposure to gold. So that's one way you can use the gold-silver ratio to your advantage, is maintaining exposure to the precious metals sector. Just, swap out the overvalued one for the undervalued one. And then you can swap it back when the pendulum swings to the other direction.
At 92 to 1 right now, do you still see it as an opportunity to swap gold for silver? Because I know it's fallen dramatically. It was 106, I think, at its peak this last cycle.
I mean, you could. I think it all depends on personal situation. So let's just say you're someone who's, 95% gold and 5% silver. Well, yeah, that could make some sense to rebalance. But if you already have a nice, healthy balance, probably just best to sit on your hands. It all depends on personal situation. But, I like to make moves like that when we're at the extremes where the risk reward is so favorable. So to me, anything over 100, if you look at that gold silver ratio chart, anytime it's over 100, it tends to not stay there very long at all, like at most a handful of weeks. So, I took advantage of that opportunity when it was over 100. We're back below it now, but if we got over 100, yeah, I'd look to maybe do that again.
Now, last thoughts for our viewers. I mean, as we see silver running, we see platinum running, we see gold staying quite high at the moment. For those, I guess, accumulating over time, would you still maybe suggest buying the dip and maybe holding off as we've seen silver, rise so dramatically over the last couple of days? Or what is your take on kind of investors who are, trying to dollar cost average or looking for opportunities, but still have a core position? What is your take on maybe some insights you can give in their situation?
Yeah, I think dollar cost averaging is a great strategy. That's what I do. I've been doing it for 15 years, where every couple of weeks, whenever I get my paycheck, just buy. I have it. It's on autopilot. I don't even have to think about it. But what I do is using that gold silver ratio. Like right now, every month I'm just accumulating only silver. When that gold silver ratio normalizes, I'll make it 50-50 gold and silver. And then, when the ratio swings the opposite direction, I'll accumulate only gold. So for me, with this 96-to-1 ratio, I accumulate 100% silver each month on a dollar cost average basis.
Perfect. Any last thoughts before we let you go, Steve? And where can our viewers find you online?
Last thoughts? No, I think, a lot of people, there's a lot of voices out there on social media and YouTube. And, I love your channel because you bring on some really good balanced voices, and really people have been doing this for a long time. But, a lot of people, well, I think if you're new, you may have a tendency to follow traders when you're not a trader yourself. So, tune out the noise, the short-term noise. We're in a bull market, and the best thing to do in a bull market is accumulate, have a long-term exit strategy for sure. But, don't try and get too cute timing, selling every little 5% move higher and think you're going to buy back, because that's often more easier said than done. And silverchartist.com is our website. We're doing a nice $11 promotion now, and it's an over-the-shoulder service. I don't get everything right, but our goal is to time the turns within about 10 to 15% of the major peaks and major bottoms, and pretty good track record of doing that. Not perfect, but appreciate the opportunity to mention that.
Thank you so much, Steve. Really great to always have you on the show here. And I think your point about, not getting in and out of the market is really good. And one of the ways that people can maybe force themselves not to get in and out is to actually hold at least a portion of their holdings in physical precious metals, in storage or with themselves. I mean, it seems like that's a good way to kind of, I guess psychologically, it adds some friction, right, to selling right away. It's a bit more difficult, so it helps people just to kind of hold tight there.
Yeah, so true. And one more point on that, first, because a lot of people do want to scratch that itch, and I do the same. I'm a trader, but I'll create a separate dedicated trading account. Like, it's not just mixed in with my long-term investments, it's a separate one. So whenever I log into that thing, it's like I've got a different set of rules, it's a different mindset, and it's with money I'm willing to lose. So if you're going to do that, I think that's an idea to consider.
Fantastic. Steve, once again, thank you so much for your time today, and God bless.
Thanks so much, Elijah.
This is Kaiser Johnson with Liberty and Finance. With silver's recent spike higher, if you're needing to raise cash, Miles Franklin stands ready to buy your silver at highly competitive buyback prices. Also, with a high spot price and still low premiums, it's a great time to swap from silver bullion into silver eagles and junk silver. And finally, we're also happy to swap your gold into silver while the gold-silver ratio is still high, before the silver train leaves the station. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.